Alright guys, welcome back to another video. So as you can see by the title, today uh, I'm going to be talking about 5 things I wish I knew before I started trading. Now these 5 things are very essential to every successful or profitable trader. So make sure you stick to the end of the video, like, subscribe, do all of those things that's going to push this video for other people like you to see it, and then let's get into it. So if you're watching me for the first time and you don't know who I am or what my name is, I am the sniper trader of Sniper Trades Academy. So yeah, with that being said, let's just get into it. Now, the first thing that I want to talk about is trading mindset. You need a trading mindset. You need a trading mindset. That's the first thing on the 5 things that I want you to know before you start trading. Okay, you need a trading mindset. Now, on the trading mindset, there are a lot of things that we can talk about, but I'm going to narrow it down to these things so that you can understand what I'm trying to say by trading mindset when it comes to when it comes to being profitable or a good trader. Okay, so one of these things include trading is a game of probabilities. All right, trading is a game of probabilities, and you can be up today and then you can be down tomorrow. All right, so you need to get this. You need to put this at the back of your head that once you get into trading, you're not going to win all the time. Okay, there are going to be ups and downs in this shit. All right. So it might work today, it might not work tomorrow. Okay. But it's the same strategy. Nothing changes. All right. Nothing changes. It's still the same thing that you're doing, and you don't have to change anything. So you before you even start trading, you have to understand that trading is a game of probabilities. Now that we have that on the way, we have that being said. The next thing that you should know about the trading mindset when it comes to the 5 things that you should know before you start trading is to control your emotions. I don't know how to say this loud for you to understand, but you need to control that emotions, okay? When it comes to winning trades, when it comes to losing trades, when it comes to not being able to find a setup to, take a trade, that is when FOMO comes in, fear of missing out, and you start doing things that you're not supposed to do. All right, you need to learn how to control your emotions when it comes to trading. So, under the trading mindset, so far I've talked about 2 things. You have to understand that trading is a game of probabilities. Okay, trading is a game of probabilities. Probability. Yeah, you have to understand that. And the second thing on the trading mindset is that you have to control your emotions, all right? You have to control your emotions because if you're not able to manage those emotions, trading is not for you. Okay, let me just say it like that. If you cannot control your emotions, then trading is not for you. Okay. Now, the third thing on the trading mindset is to be patient and disciplined. All right, this is very important because once you start trading and you're not disciplined, I can tell you the door to profitability or the door to being a successful trader is closed. Okay, it's closed. You don't have the key if you're not disciplined and patient because it takes time for you to even find a setup, and it takes time for it trading to even start working for you or before you start seeing progress. So if you're not somebody who is patient, or you don't have patience to follow every step of the way in order to be a very good trader, then I don't think it is for you. Okay. So one thing that I will really, really, really talk about the most is being disciplined and then patient. Okay. It comes together. You cannot be patient and not disciplined. If you're patient, you're disciplined. If you're disciplined, you're patient because you can discipline yourself to wait for a setup. All right. And if you are patient enough to wait for a setup, then you are disciplined. Okay, so it comes together. You cannot do away with being patient and disciplined when it comes to trading. That's a mindset that you should have. I will recommend you to. I mean, trade, bro. English is so hard, man. It is what it is. I will recommend you to be patient and be disciplined. Okay, so now I've talked about three things under the trading mindset. We go over again. One, you have to be you have to be patient and disciplined. The second is you have to control your emotion. And what I talked about the first was that trading is a game of probabilities. All right. Okay. Now let's move on to the next thing. Now if you want to have a very good trading mindset as a good trader, then you have to understand that focusing on consistency is very, very important. Okay, why am I saying this? Because you're not going to make a win today and say, yeah, that's it. Okay, if it is consistent, then we can call you a good trader. All right, but you cannot just make this one big win and then call yourself a good trader. It doesn't work like that. You have to be consistent. Even because when it comes to trading, if you're not consistent, or if even the wins you are getting are not consistent, you cannot call yourself a profitable trader. Okay, so you have to understand consistency. You have to be consistent when it comes to trading. You have to be at it. You don't have to, let's say you do this, you do it today, and you take one win and then you call it a day, go sleep in like 5 months, and then you come back. No, 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 no. That's not how. If you want to be a profitable and successful trader, that's not how you should be looking at things, or that's not how you should be doing it. That's not how it is done. Okay, at least for what I know. Okay, now let's move on to the second thing when it comes to being a successful or good trader. The second thing on the five things you should know of being a good trader is risk management. Okay, we talk about this not much often, at least from where I'm sitting. I don't see a lot of people talking about risk management because they just posting the lifestyle, they just showing off what they have, showing off the Lamborghinis, showing off the mansions, showing off the yachts, vacations, and all of that. And they talk less about risk management. That's a very important thing when it comes to trading, because if you cannot manage your risk, if you cannot manage your capital, then you are not going to survive in this industry. Point blank. I just had to put that there. If you cannot manage, if you don't have a structure, if you don't have a plan on how you're going to grow your account or how you're going to make profit consistently, then I think trading is not for you. Okay. What most people say is risk 1 to 2% per trade, but here's what I would say about risking 1 to 2% per trade. One, before I say this, I want you to understand that trading is not a get rich quick scheme. Okay? Okay, good. Now that we have that, you should also understand that risking 1 to 2% per trade means you have to have a bigger account. Okay? You cannot risk 1 to 2% on a $10 or $20 or $100 accounts. You'll be making chicken change. Okay? I have to say that. People say risk 1 to 2%, but they do not give you the detail why you should risk 1 to 2%. I'm giving you the gem, bro. I'm giving it to you. If you're risking 1 to 2%, then it means your account is a very big, big, big. I mean, let me stress on big. Your account is very big. Like say anywhere from 10,000 to 1M. Okay, you're having anywhere from 10,000 to 1M. If I'm to go all the way down, then maybe then 5K. Okay, if you're risking 5K, if you're risking 1 to 2% on a 5K account, well, you can have some decent profits. Okay, something that you have to keep your job and then trade at the same time. But if you want to quit your job and trade full time, I think risking 1 to 2% is supposed to be done on a bigger account. Okay. Now, here's one thing about the risking 1 to 2%. Let's say you've waited for say 5 or let's say 3 weeks. You've waited 3 weeks for a setup. You've waited 3 weeks. You've been able to have the discipline and the patience. You've controlled your emotions, and then you've waited 3 weeks for a setup. 3 weeks for a setup. You know this is your strategy. It is it. You're seeing your confluences, everything that you're supposed to see, everything that everything that makes that trade a good setup. You're seeing it. How are you going to risk on that particular trade? Are you still going to risk 1%, or you're gonna, you know, yeah, expand the lot size? I'm being raw. I'm being honest with this shit. People don't really talk about these things because they want to do. Yeah, I understand it, but if we're being real, risking 1 to 2% on, let's say, a $1,000 or $3,000 account, it's not that much, So if you really want to make some, decent amount of profit, I'm not saying you should go break or full port the account, but I'm saying you should at least risk something that you don't mind losing. Okay, that is all I'm gonna say on the 1 to 2% per trade. You can understand it anyhow you like, but this is the real deal. This is what I'm talking about. If you're risking 1 to 2% on an account, then it means that you have a sizable account. Okay, all right, you have a sizable account. Risking 1 to 2% is okay, but if you have a small account and you're trying to risk 1 to 2%, I guess you cannot quit your job. So yeah, that's it about risking 1 to 2% on a trade and the risk management. Okay. Now, one thing, the second thing that I want to talk about on the risk management is that you always have to use a stop loss. Okay. Please, please, I don't know how to stress this enough. Stop losses are not lame. Okay, let me say it like that. Stop losses are actually something that shows that you are a very good and well calculated trader. Okay, you know what you're doing. You cannot just enter a trade with no stop loss. What are you expecting? If the market should go very very volatile at any point, with you being on the downside, you lose your account. Okay, so please and please and please, if you want to really take trade seriously, if you want to take trading seriously, then you have to make sure that if you are entering a trade, there is a stop loss. Don't forget this, guy. You need to put a stop loss even before you enter the trade. Don't forget about what any guru, Instagram guru is telling you. I go football, I know what I'm doing. Bro, you need a stop loss, okay? You're not lame if you put a stop loss. You need a stop loss when you open trades, okay? I think one of the first thing you should even do before you open a trade is to calculate your stop loss, all right? This is proper risk management I'm talking about. So let that sink in and then you understand what I'm talking about, okay? Now, the next thing I'm going to talk about under risk management is risking 1 to 2 RR on a trade, or 1 is to anything above 1 is to 2 on a trade is good. Okay, if you want to risk 1 is to 1 on a trade, doing that consistently is not going to grow your account well. Okay, and one thing about risking 1 is to 2 on an account is that if you're going to raise 1 is to 2 on an account, let's say you open a trade and it's 1 is to 2, make sure you are trailing your stop. Okay, very important. You have to understand, make sure you are trailing your stop, because then if the market, if anything, because when it comes to trading, when it comes to these market, anything can happen. Okay, so this is some of the things that we barely talk about when it comes to risk management. So if you are in a trade, forget about being a swing trader. Forget about being a day trader. If you are in a trade and you think you're risking 1 is to 2 or 1 is to 2 and above, I think that trailing your stop, even not even risking 1 is to 2, every trade that you take, you need to be trailing your stop. You need to be not get out of the trade when you're in profit, but trailing it, I think, is going to grow your account. Not even I think, I know it's going to grow your account. Okay. So yeah, that is what I can say about the risking 1:2 RR on a trade. Okay. Now, the next thing that I'm going to talk about on the risk management is protecting your capital. Otherwise, risk management is nothing. Okay. If you're able to protect your capital, then you are risking wisely as a trader. And to do this, you have to follow all these things that I've talked about on the risk management. That's risking one to 2% of your trade. You know what that means. You know what I really mean when it comes to risking 1 to 2% on a trade, because I just said that. And always using the stop loss and targeting a 1:2 RR on a single trade. And make sure you're trailing your stops as you in profit. You're trailing, so you can even go into a trade without having to take profit. If you think that you cannot monitor your trades, then maybe your take profit, using a take profit, particular target for the market to get to before they get out is cool. Okay, then you can cash in your profit. But if you think that you can manage, you can sit at the desk and manage your trade, watch your trade once you're in profit, you need to be trading that stock. Okay, trust me. Once you start doing that, you're going to see progress. You're going to see your account grow. It is very, very important. Okay. The next thing that I want to talk about, bro, the third thing that I want to talk about is the trading plan and journaling. Okay, I can't stress this enough, bro. You need to have a trading plan. You cannot, if everything you do in this life needs a plan. Okay, you have to get a plan. If you don't have a plan, where you're going, where you want to be at when it comes to trading, what you want to do with trading, then I don't think this space is for you. Okay, I'm just gonna say it how it is. Some people are going to say shit that will make you feel okay, stroke your ego a little bit so you can, keep following them. I don't care if you don't follow me. Okay, but it's cool if you do. All right. So I'm just gonna be real with you because I don't care. I don't care. I'm gonna say it how it is. Okay. You need to be journaling. You need to have a trading plan. You think journaling is lame. You think "Ah, it's too stressful, man. I'm making a profit. What about journaling? When you start to journal, you're going to see the progress you're going to make. But trust me, if you start to journal, let's say every single trade you take, you write down the kind of emotions you were in at that time, what you were thinking, the strategy you were using, the stop loss, everything you put in. It's like a whole document on its own. You're creating a book like a trading book for yourself that you can go back to anytime you feel like you left something or you want to, like you really had to go back on that thing and check out, yeah, what clicked at that time that I can do right now presently that is also going to work. Okay, so trading, uh, having a trading plan and journaling is very, very important. So you're going to create entries and exit rules. You put all of those down in your journal. You're going to set risk limits. You're going to journal every single trade. I mean, every single trade. If it is even a loss, put it down. If it's, I don't care whether it is profit, loss. Put that shit down, bro. Put that shit down. Write it somewhere. Have a journal. It could it could be a hard copy, it could be a soft copy, whatever it is. Please journal. Okay, it's very, very important as a trader. All right. Now, once you start journaling, you can review your performance and then know where you're lacking or where you're doing good so that you can improve as a trader. All right. Now, the fourth thing that I want to talk about and the five things you need to know as a trader is market structure and strategy. Market structure is not something that, okay, you go look at the charts and yeah, it's we are buying, we are selling. That's what some people do. They just look at the chart and then hit buy or sell. All right, you need to understand what you're looking at. You need to have a strategy. Your technical analysis should be very important because these is what is going to make you the profits you want. Okay, so if you don't have a strategy, you're just hitting buy, sell, you're just on trading view. Oh, I think I should buy. You're not trading, you're gambling. Okay, and even I cannot even term that as gambling because even some gamblers, do the due diligence to, like they have some idea of what they're doing because you cannot just sit and then say, yeah, today you're buying. Why are you buying? Okay, today you're selling. Why are you selling? There should be a reason, and this comes to having a strategy. Okay, you need to be able to identify trends. You need to understand what support and resistance is. Support and resistance is. You need to know what supply and demand is. You have to follow all these things to be able to become a good trader, and have a strategy. All right. So once you're able to understand these things, then you can be a good trader. Then you are on the way, or you're on the path to becoming a profitable trader. I hope you understand what I'm saying. Yeah. So the last thing that I want to talk about is following all these rules, all these things that I've talked about. Following having proper risk management, having a trading plan, your journaling, and then market structure and having a strategy. That's the fifth thing on the list. Okay, so if you're following these things, then you are on the way, or you're on the path to becoming a profitable or successful trader. Yeah. So that will be it for today. Make sure you subscribe to the channel. Make sure you liking this video. Make sure you're following me on all accounts because sometimes I'll be dropping shorts and reels on Instagram, TikTok, and all of this. So yeah, that'll be it for this video. I'm your boy, the Sniper Trader, and see you in the next one.